Hi, this is Joseph. Today I'm going to show you some trades that my trading system developed and gave us an opportunity to take these trades. There was a total of, just the three trades that I'm going to show you here, it was a total of 180 pips. I'm going to show you exactly how we get into these trades and what we do. But before I do, please subscribe to the channel, like the video if you haven't already, comment on this video, and turn on closed captions. Now let's get started. So we're looking at the pound dollar. The pound dollar, when I use these two particular trading strategies, I have others. There's actually going to be another video that I'm going to release today to show you how I use a certain pattern that allows me to trade off a support when you see bounces like this. I'll show you the euro dollar in just a moment, but I'll post that later today. What I'm going to talk about is the HL30 and the Good Morning London strategy. Now the HL30, that doesn't necessarily develop during the London session. I got an email about that. It was somebody was trying to figure out exactly when that HL30 sets up. The one thing that I want to remind you of is that with the HL30, all I'm doing is trading off of the previous day's high and low. So depending on where the closing prices are at the rollover, you can see according to that dotted line there, that's really going to, for the most part, it's going to set up exactly how long it's going to take. Sometimes price will close at the highs, sometimes price will close at the lows, and I can trade an HL30, which would be either, in that case, a bounce off of support or a bounce off of resistance in the opposite direction. That's all we're doing. It's just a reversal trade. It's very simple. I use one indicator, which is the CCI indicator, and I use a 20 pip stop, a 20 pip target. If it hits the first 20 pip target, I trade it to an additional 20 pips beyond the first 20 pip target. So that trade would end up generating approximately 60 pips. Let me walk you through it. So this one, the HL30 here on the pound dollar, it developed just shortly after the rollover. Sometimes it'll do that. Sometimes, let's say, for example, in the past with non-farm payrolls, it doesn't happen every single time, but in some situations with non-farm payrolls, depending on how the market's reacting to it and what the expectations are of the numbers to be released, the market could go sideways. And it could go sideways right through the rollover, all through the Asian session, all through the London session, and it doesn't really start to pick up momentum until we get close to the release of the non-farm payrolls numbers. This is a scenario that happens occasionally. With that situation, the reaction after non-farm payrolls creates the move where price would then go up or down and then test the previous day's high or low, and then I can simply trade the reversal and I pick up a quick 20 to 60 pips with non-farm payrolls. It's that easy. But you have to wait until non-farm payrolls is released. The other thing that I really like about trading a situation or a strategy like that, like the HL30 with non-farm payrolls, is that it's very stress-free. It's not important that you jump in the split second that the news is released. That can be pretty stressful. I did that for many years when I first started trading. It was fun. It was exciting. I made a lot of money. I lost a lot of money. A lot of things can go wrong, but I don't do that anymore. There's no reason to do that. This is a really safe and easy way to approach trading with the news. What I do is I get into the trade. You can see with this downward pointing arrow, that's my entry. I get into the trade and I open up two positions. I always say that if you're trading, let's say if you're used to trading one mini lot or one standard lot, just cut it in half so that way you can comfortably and safely trade this. So I'm going to have two positions open. My first position is going to close at that first target. So if I get in at, this was 96 was my entry. My first target's going to be, 98. My first target's going to be 78. My second target's going to be 58. Again, first 20 pip target, and then beyond that, it's going to be 58. So when I get into this trade, again, I wait for it to hit that first target. Once it hits that first target, I then close out that first position and then set the stop at a break-even stop. That way I protect my profits on the first trade in case it doesn't go to the second target. Now today, and this happens pretty often, I've got many videos on the YouTube channel and you can see this scenario play out very often. Doesn't happen every day. You have to be very careful about it. And I also teach you in my trading course how to analyze based on yesterday's closing prices, which would be over here, if the HL30 or the Good Morning London strategy would be effective or worth trying to trade. In some situations, based on the closing prices and the way the daily candles look and the setups, I teach you how to do this, you can determine if the HL30 or the Good Morning London strategy isn't going to work. That way you can avoid it altogether and eliminate most of the failed trades that would happen as a result of trying to trade these higher risk positions. So the second target, it hit here. So again, both positions are going to close out. The first one is 20 pips. The second position is a total of 40 pips. So that's 60 pips here on the first HL30 trade. On the same pair, I also had the Good Morning London strategy. Now the Good Morning London strategy, in my opinion, is actually a little easier than the HL30 because I don't use an indicator. There is an indicator here, but it's for the HL30, but I continue to trade and look for the Good Morning London strategy on this same chart, and then I just ignore the indicator. I don't want to look at the indicator when I'm trading the Good Morning London strategy. I also teach how to use this strategy in my trading course. Now this sets up right at the London Open. So if you can trade the London Open, it's a great opportunity to make some more money. This one again paid 60 pips. This one, for the most part, we do the same thing. We get in at a very specific entry. We use a 20 pip stop and a 20 pip target. And if it hits the first 20 pip target, I then trade it to a second target, which was 20 pips beyond the first. So again, effectively, when I open up two positions, I close the first one for 20 pips. I close the second trade for 40 pips. Again, 60 pips. So between these two trades right here today, just with these two trades alone on this pair, 120 pips. Let me show you the HL30 on the euro dollar. The euro dollar set up a really easy HL30. I don't use the Good Morning London strategy on the euro dollar. I just use the HL30 or other variations. I have breakout strategies and Tech 1 reversals. Those are all explained in my trading course. And when the HL30 doesn't set up, it is very possible that it could still print a reversal, but you want to be able to take advantage of it using another strategy, which would be different stops and different targets. You want to be able to calculate that. So again, the HL30, very, very easy. We're using just one indicator, which is a CCI indicator. I get in when I'm supposed to on that reversal candle pattern. Again, this one's set up just a couple of hours after the rollover. You can see my entry here was 1.1367. When I get in at 67, my first 20-point target is going to be 47. The next target is going to be 27. So again, I open up two positions. I close the first one at the first target, and then the second position at the second target for a total of 40 pips on that one. So again, 60 pips. Between these three trades that I just showed you, the HL30 on the euro dollar, which is what you're looking at now, the HL30 on the pound dollar, and then the Good Morning London strategy on the pound dollar, that's 180 pips. We did have some reversals. We also traded some reversals using the Tech 1 strategy. I'm going to show you that in another video that I'm going to drop and release later on my YouTube channel today. I'm going to show you exactly how I use volume to be able to confirm those reversals. And again, they weren't HL30s, but they were still reversals. And I teach how to do all of this in my trading course. Very easy, very effective. And every one of these trading strategies is very, very structured. I have checklists for each one of them. We don't change the rules. We don't say, oh, well, that one didn't work because of this particular reason. We know why trades aren't going to work. And very often it's because of the conditions that the particular setup is developing in. You need to be able to understand the conditions and the trading environment so that you can look at one particular strategy. For example, the HL30, as I mentioned, we can look at yesterday's closing prices and we can decide if today would be a good idea to use the HL30 based on the way the closing prices and the structure of that daily candle setup. If it doesn't look like it's a good idea, and I teach you exactly how to do this, you just avoid the HL30 because those are going to be the higher risk trades that are likely to fail, so we avoid them altogether. This eliminates most of your failed trades. Thanks for watching. I hope you had a good trading day.